So I'll quickly call Mihir, Mr. Mihir Sandesara from Padmam Capital. He's going to talk about his platform, MySmartStocks. Mihir has a very extensive global experience in the asset and wealth management industry, and of course, I'll leave it to him to talk more about it.
Good morning, namaskar, kem cho, vanakkam. Myself, Mihir Sandesara, founder and CEO of Padmam Capital. Thanks to Sumit, I think he has set the stage right for me to get asked many interesting questions when I talk about it. And thank you for your questions also. I will address in more detail as I go about it. Any stock or asset class I name, there are standard disclaimers. I will name them. There is no association of advisory feeling or any rejectory feeling, so please consider that fact. There are 4 generations behind me. I am the 3rd generation financial consultant, born in Mumbai, brought up in Ahmedabad, and trained and experienced in the United States. Grandfather having legacy with the HNIs 60, 70 years ago. My father, who is alive with 65 years of experience in Indian capital market, who is a fundamentalist, only works with the annual reports, nothing else, no technology. I am a technopreneur, studied with advanced degrees in US and believe in behavior analysis. And my next generation, having worked at Morgan Stanley in Mumbai, now she works in United States for world's largest mutual fund company called Vanguard. So my second line of defense is getting ready. A little bit about my background. I'm a certified family office advisor. I have stayed in US for 11 years with my executive MBA from world's top 25 universities, Arizona State University. We delivered 2 things. One, the financial services to global clients, and one Fintech platform. Global clients, corporates, service societies, NRIs with interesting problems to solve since last 22 years. And our rich experience along with my father, we hold 88 plus years of experience. That includes last 28 years of experience in Wall Street. These are some of the international solutions we provide. We have tied up with the Gift City-based exchange, and we offer solutions now in 150 stock exchanges of the world, and so many stocks, mutual funds across the globe. Many good names across the globe. 33 countries, 24 currencies, we do business. Now let's focus on Fintech platform. MySmartStocks, I call it, it's my own baby, my own intellectual property. I'll explain further. How many of you have seen a Wall Street movie called Inside Job? Only 7 to 8 people. This was the reason to create this entire platform 13, 14 years ago.
The bankruptcy of the U.S. investment bank Lehman Brothers and the collapse of the world's largest insurance company, AIG, triggered a global financial crisis. In the new system, lenders sold the mortgages to investment banks. Investment banks could create complex derivatives called collateralized debt obligations, or CDOs. Lenders didn't care anymore about whether a borrower could repay, so they started making riskier loans. The investment banks didn't care either. The more CDOs they sold, the higher their profits. Suddenly, hundreds of billions of dollars a year were flowing through the securitization chain. The result was the biggest financial bubble in history. By Friday, September 12th, Lehman Brothers had run out of cash. 2 days later, Lehman Brothers announced record losses of $3.2 billion, and its stock collapsed. But world stock markets continue to fall amid fears that a global recession is now underway.
2008, when this happened, we only had one question. Can we predict market corrections before they occur? We put in the team, 3 years of research and development. I even lost one laptop because of to number crunch, so many things. End of the 3 years, answer was yes. And I will show you what events we have predicted so far, publicly known, available to our site, MySmartStocks.com. And here are all the events across the globe affecting Indian capital market. When Raghuram Rajan was our finance minister during taper tantrum, one of the biggest and the closest predictions we had done, Sensex will lose by 2,390 points. It will likely to occur in 40 days. Exact same points it went down by within 33 days. So we do two things. How many points Sensex will go down by, and likely to go down by how many number of days. Even we predicted what happened before COVID. More than 3 months ago, on 19 December 2019, if you were our client, in the evening you would have known something is coming. We did not know this was COVID, but it came with the shining colors. 41,000 Sensex. We informed our clients there is earthquake coming of 10% correction in Indian market. Actually, it became 40% correction in 88 days. So touch wood, we have been able to predict such ungodly events maybe created by us humans, albeit we have success rate of only 88%. We don't have crystal ball, we are not God. We have system that actually tracks the human data. There are fundamental analysis we do, there are technical analysis we do, only partially, but majority this engine is based on human behavior analysis. Lot of things we can help asset managers, say AIFs or institutes, on portfolio automation to reduce their risk. I want to impersonify today as one of the juries who is coming next, Mr. Ashwin Patni, as if I am managing his with Axis Asset Management Company. He is managing Axis Balance Advantage Fund. Our product is very simple. As a fund manager, you have two challenges. One, your own benchmark, and second, your peers. Are you doing better with your peers? So I took an example of this 2,000 crore funds. As of last month, what stocks they have, about 43 stocks. We enter into a platform and you select on the top, say you are a fund manager, you want to see the advice for MFI notified top capital, large cap stocks, top 100, you click on that, you select your benchmark, say Nifty 100 for example. The process will carry on with millions of calculations. Within 2 minutes, you will get the recommendation. 4 things our platform does. 1, what large cap stocks you don't have. For example, in this case, it doesn't have, Power Grid, Maruti Suzuki, Canara Bank, along with the liquidity side of it. See, these are large funds. They can buy 50 crores of, assets in one day. See, if they don't have enough liquidity, they have difficulty in making decisions. We also track relative alpha that each one of these stocks create. Second thing it does is, already existing stocks they have, we suggest they can increase the allocation. See, this fund industry suffers from 2 things. Suddenly there is a lot of purchase from all the investors. Net they have to buy few things every day. So these are the 2 things it takes care of. Next in line, it does where to take profit from. Meaning, Diwali aa rahi hai, let's do some profiting, enjoy whatever it has gone up without even complaining that, oh, we didn't take the profit. So that you can also take home in case there was a net redemption pressure onto the fund. Last but not least, we found one stock called Clean. This was one of the chemical stock. With the poor liquidity and reducing alpha, the stock tool suggests you should exit. So 4 important things associated with any fund manager to create alpha in the active fund management. Our platform does it very nicely, very easily. Big data and AI, like every other fintech platform you can find, we go deep into 3 things: stock analysis, sector analysis, market analysis. All NSE and BSE stocks combined, more than 5,000 stocks. Think of this an ocean of 6,000 stocks. We look at Nifty 50 as the benchmark because even FIIs will come to India saying, what are the benchmarks, who do we fight against, and how do we run derivatives and create even larger profits. Every stock of Indian platform has its own wealth creation index. We call it StockX with respect to Nifty as a benchmark. So in the ocean where the Nifty is, we settle, normalize every day, and who survives and stay above the water. This is what you go after. See, the purpose of tech platform is to create larger wealth, which will augment and will complement the efforts of all the fund managers. Will also allow you to do 2 great things. to compare the same stock with your own benchmarks in Nifty 50. And second, for example, if you are looking at TCS, how does Infosys fare with it? In case there is a decision you need to make, you can go across the time series, say last 12 months, 3 years, or as many as years we have the data since 2007. So these are the things we do. This is only the synopsis of it. We track last 2 years history of bearish, bullish trend. We also look at the behavioral science behind this. What is the liquidity chasing this stock? And whether it's increasing or whether it is dropping. So a lot of things that go behind it. We have an automated robo-advisory built into the platform. A lot of people say, oh, you invest, it's a stock at 100, it will go to 150. We don't believe in that. There is a difference between technical analysis and behavioral analysis. Like stochastic analysis versus statistical analysis. Stochastics have inherent limitations. We don't believe in, say, you should sell your stock at 150. If it goes into 180, we have built-in exits. There are 5 exits we offer for every holdings you have. All you have to do is, I bought TCS or Tata Steel at this price on this date. That's it. We don't need quantity. We'll give you 5 free assistant to you, 3 for profits and 2 for loss. We cover both sides. For ripping your profits as well as locking and loss protection, we also protect on both sides. For example, Aurobindo Pharma, you bought it at 6 Jan 12 at 46 rupees. On 13 July 2020, it ran to 809. Now you have to make up number what CAGR returns you are happy with. Now these are not mandatory returns. But we have some clients, humko dena, we want to decide based on what we need to do. Some of our clients don't do anything for 10 years. But they are happy that no matter where in the world you are notified on your email. Sir, you hold Aurobindo Pharma, just for your knowledge. So they are happy to do whatever action they need to do. So we cover, this is through automated email notification, and it's fairly complex. These are all behavioral exits. This has nothing to do with technical analysis. Trust me. For every exit, we had to work for 3 months to do a back testing and then come back with the purity and refinement and then finishing. Here is another unique feature of our platform. Money flow. FIIs, LIC, mutual funds, insurance, retailers, collective money chasing which stock or who are dropping from this particular stock, we can let go in any time history. This screenshot is for 15th of January 2013. If I show you on my tool, I can literally take you to the old history 10 years ago. FMCG is number 1 stock, Hindustan Unilever. You see in the bracket, number 1, that number 1 stock, Christmas party is over, people have started selling. 31st party is over, New Year's party is over, even 15th of January. Every day people have sold this stock. Number 1 stock in FMCG has become number 8 ranking. Let me explain, this is very simple to understand. Class of 50 people. If you fail to get good grades, professor will not be happy. Same thing happens here. People will start dropping attention, they will start dropping money, and you will lose the investment. Exactly vice versa happens. So, this trend spotting, I'm sure Mr. Bautik, you have been looking for some trend spotting solutions. This is one of them. It will give you deep analytics in any time history that you want to see. Remember, when FMCG people start exiting, it creates a new bull market because people exit from safety. Nobody likes to remain in safety for longer period in order to create better returns. So then you need to see, oh, where does the money go? Oh, maybe better things, Procter & Gamble, Bajaj Consumer, or maybe other new sectors come. For example, capital goods, specialty chemicals. See the performance of those 2 sectors after 2013. So these are all the trend settings and behavioral analytics built into the system. I am a passionate person with numbers, finance, mathematics, tax, and investment. I also hold 16 years of experience in United States individual tax laws because I've lived in US. So I see things differently, not just with the purview of how much money you made. I say how much money you took home away from finance minister. That's the net gain you have. So even in the fixed income, a lot of things we do, including suggesting some of the stocks, which are purely for fixed income rather than just creating your wealth. Wealth is not just the multiplication of the numbers you started your investment with. So very short and brief. I will open the floor for questions if you may have any. Thank you.
So I have a question.
Yes.
This is me.
Yeah.
While you showed us some of the outcomes, what sort of an engine has been built? What kind of a technology has gone into it? Because a lot of what you said, actually, a good, reliable broker anyway offers those advice. Where it comes from, in your case, you say there is an AI-based tool. Is there a way to look at that? What happens there? Or because we just saw some outcome slides on what it recommends.
I wanted to have the actual online access to show you live. Our data comes from BSE and NSE. We don't believe in other third parties, directly from the exchange. We process that data. We do time series analysis, backtesting to ensure that whatever we highlight also stands the true test of the time. And what you're talking about is our purpose is to create the wealth on the longer period of time. I'll give you an example. 2007, if you held Reliance Industries for 10 years, even though Reliance gave 1-to-1 bonus, you practically made no wealth. If you believe in blue chips, it was a bad decision. Reliance is not a bad stock. That's not what I mean. Longer period, people also want to see the reward built into it. So in our example, if I go back, for example here, some of the stocks you put in, you may not find any profit exits. In US, they say no news is good news. You keep holding it. You don't want to exit it. It builds a long-term wealth. If there is no wake-up call, there is no need to wake up. And we have built into the behavioral analytics of exit. And it took 15 months to create 5 different exits for any holding across your portfolio.
One question that I had in my mind was that, let's say if you offer this solution to an institutional client, like an asset manager, the example that you gave of a mutual fund, I'm assuming your system would give, let's say, 2 different portfolios. If you were to do the same analysis, would it give the same recommendations?
Obviously, because we don't focus on retailers. Larger money needs very sensitive decisions. We have one AIF based out of Ahmedabad managing 50 crores. Person says, we also have research analysts. You have reduced their time from 6 months to 2 weeks. They do also their analysis despite us giving any platform. So our recommendation remains same. It is not like customizing recommendations because he's a different user. No, it doesn't make sense. Honest to God, because you holding Reliance and he holding Reliance is the same thing, regardless of whether his portfolio is 5 CR or 500 CR.
Yeah, I would have been surprised if the recommendation was different.
No. So it can't be different. It's the same. It's up to asset manager to decide whether, if it suggests a Larsen and Toubro, whether they want to buy Larsen and Toubro or not. Now that's a discretionary choice. Because we don't have an automated platform to execute. Execution is entirely your decision. We just deliver intelligent, information to you.
And is it just recommendation that you're giving, or are you giving some backing to the recommendation as well, to the fund manager to base his decision?
Now that's a part of a solution packaging, I call it. We can do that if there is a demand for it. So far, people have been happy, as I gave you the example of this fund manager. He was surprised to know, because we work with clients, if they have some suggestions, say we think like 30,000 feet view of the market. Give us this thing. So, we go back to the tech team and say, oh, is this possible? Can we crack it? What time frame you need? Answer is yes, we deliver it. And we work with the client whether we delivered this or not. So, yes, that is entirely possible.
So you said this is a behavior analysis, right? I'm trying to understand exactly what you track as a metric when you say behavior.
we quantify the human behavior. Like this guy asked the question, if tomorrow there is going to be a war, that's a black swan event. It's not trackable. Honest to God, that cannot be tracked. For example, if you poll everybody in this room, do you like Tata Steel? Maybe you will like, he will not like. Aggregate input will drive you to a direction where there is a behavioral input. Oh, likelihood of this stock being accepted as, common asset to be in your portfolio, either positive or negative. So we go by a lot of, numerical models, which converts, behavior into numbers. We aggregate, we are like a checkmark system. This happened, this happened, this happened. I wish I had a, live platform like in this particular stock analysis screen. I can show you by exact numbers where last 250 days, trading days in any year, 12 months, we exactly detect this day it was perfectly in buy because all the check marks it had ticked. Exactly opposite mirror image. Oh, this was not that, this was not that. Meaning it was in completely sell. I can show you some examples with 90 buys and 1 sell. Nobody is practically selling this stock. So this behaviorally extracting V by numbers, telling you, oh, this is a good, you should have this in a portfolio for consistent period of time in order to give you a longer term wealth.
So, so if I understand right, you're tracking the buy and sell calls.
Not calls, buy and sell determinations. It's not about, oh, one of the funds decided I'm tracking this particular stock, I give buy.
Calls as in actual action taken.
Yeah. Agree. Yeah.
So how's that different from technical analysis? That's what it is, isn't it?
Not really. Technical analysis may be like, oh, does it cross a 20-day moving average, 50-day moving average?
The basic information they track is the buy and sell of the stock.
No.
Volume.
It has nothing to do with the volume. It has nothing to do with the price tracking. It is a multi-dimensional, various, 15 to 20 factor check marks that we assign into the system before we decide, oh, this should be a complete buy. Exactly opposite is a complete sell. And those days we cannot determine, we don't give buy or sell. Meaning it is not a recommendation to buy or recommendation to sell. It's aggregate behavior we are trying to display on the particular stock analysis.
So technology is not magic. We have two things. One is you are defining the model. Second is the data. What is your data source? Like you said in COVID, you said that before that this will get fall. Now, what is your data source? Because the model you have not built just before COVID. You just, some new data has came and that's given you the fall. So what is your data source?
Above and beyond all the respective stock data from National Stock Exchange or Bombay Stock Exchange, there are a lot of other qualitative parameters that come, say market PE ratio, PB ratio, earnings of the companies collectively contributing to the Nifty or lifting the company higher, like trailing returns versus next 12 months projected returns. It requires a lot of analytics to see, where the digression of failure in continuing with this level of Nifty or Sensex levels. We had very hard time tracking what happened in 2008 to since January 2008 till October 2008. There's a track record of losing almost 60% of the market value. We have analyzed their data very closely to determine the factors which could actually affect, which allows us to predict the market corrections. Those are completely different than anything to do with the particular stocks altogether.
No, see, NSE, BSE, all data was not changed due to COVID. It's after it was after, not pre. So some flag you have which others not have.
Correct.
Data you have which others don't have. That's the question actually.
See, there is an efficient hypothesis. All the information is already captured in the market pricing. I think you mentioned that. There is something called insider information, which is rather earlier known by people who are in the close connect. You must have heard of a lot of front-running case recently also, where, fund manager having access, exclusive access, some leakage of information. I'm not talking about India only. United States also. So that information is somehow not necessarily leaking by somebody posting on Insta or WhatsApp. No. Exhibiting in some form of pricing factors, effect on volume, effect on somebody doing, large pool of buying or large pool of selling, that exhibits some, unnormalized behavior. If something out of ordinary, you cannot challenge the conventional wisdom. As soon as you find that challenge, you find something to detect or a red flag. And let me tell you, 12% of the time we have been wrong. So I admit, it's not a crystal ball. We try to see the best fit where, this looks like this type of correction, which may allow you opportunity to probably exit.
So,
Yeah, Andrew.
my question is, how do we measure your performance? You give all these recommendations, buy and sell. But you're not taking that someone else has got to take that recommendation.
Yeah,
So how do you measure it?
we have internally, for all these years documented, and I can share that with you, what kind of returns it has given. For example, some of the new discovery we do where a lot of stocks beat their earnings for last 8 quarters, suddenly become 2-year bullish stocks. Now these are unstoppable bulls of India, where returns could be in excess of 20 to 25% CAGR. So we document that, and within that time frame we also analyze, this is the range it has given, this is the time frame we have covered. We have done it for some small caps, some mid caps, some large caps also. Large cap giving lesser return than mid caps and vice versa for the mid cap and small caps. So internally we have done that study. We actually, when we launch that, all the back testing with the results we produce and share with the clients. We do that.
Just another question. So I'm assuming that your model or the predictive analysis for stocks versus market are 2 different tools,
Yes. Yes.
and I'm assuming they're completely independent of each other.
Yes.
Because they're trying to achieve 2 different things.
Yes. See, because I'll give you an example. One of the ultra HNI clients we have, who has a 3 or 4 digit CR portfolio, wanted to travel to Europe. He had a large quantity of Infosys. I exactly opened Infosys Janam Kundli. What does it say? Say, I'll be coming after 1.5 months. Should I sell Infosys, yes or no? I said, there is across the spectrum selling in this. Sell them all. Once you come back from Europe, I'll tell you when to enter. Because he had a large quantity of Infosys. So you're right. Market analytics versus stock, completely different things. Different things hit different people differently. So as an asset manager, market events can have a role to play, because one of the examples I think Sumit mentioned, same thing applies here also. All right. Yeah, go ahead.
So like the previous presentation mentioned a number on the kind of returns they're able to deliver to their clients. Is there a central tendency to your numbers, or do clients get completely different returns? Or would you say that if you use your toolkit, MySmartStocks, generally speaking, people will get an X percentage of returns on their equity portfolios?
Our experience is with product we also give training, regardless what level of experience they have. There are people who don't know I of investments. We have clients. People who know superlative degree of knowledge in investment. We train them equally to say to best benefit, this is how you use it. And once we train them, they create their own models. We also give them, fundamental training on what are the ROEs, ROCs, and what role they play, whether excessive P ratios help you or not. And then they start generating returns in excess of 18 to 20% at minimum. They do all across the market cap, small, mid, large. And when we begin training, we tell them there are 3 types of animals in this industry. One is a cow, which only can run at 12 kilometers per hour. Second is elephant, can run at 40 kilometers per hour. Third is cheetah, 120 kilometers. Don't invest in cow expecting it to act like cheetah. People do that and they blame, stock market is not for me. Obviously, cow is for people to create fixed income. My example, my father bought something 12 years ago. It is generating 90% return every year, and I've already gotten the money back. So I have to show them the examples. Hello, this is the stock for fixed income, generate income, live life peacefully and luxuriously. It is not always the cheetah. I'll be available for networking and collaboration in case any asset managers face something unknown problems they won't like us to solve. We can be guinea pigs, we can do pilot project. Thank you.